The UK's finance minister says the British arm of the failed American bank SVB has been bought by HSBC Holdings. It's the latest ripple effect from the crisis that began when the bank went bust on Friday. Meanwhile, US President Joe Biden is set to address the impacts on the banking sector in a speech later on Monday. The federal government has announced emergency action to shore up deposits and cushion the financial fallout of the biggest bank failure in the country since 2009. The US Federal Reserve and Treasury say the bank's customers will have access to their deposits. US officials also say that they'll be supporting depositors of Signature Bank, which they revealed was closed by New York regulators on Sunday. Al Jazeera's Rosalind Jordan reports now from Washington, D.C.
The U.S. government took control of a bank that did a lot of business with cryptocurrency firms on Sunday. This comes after the failure of Silicon Valley Bank in California on Friday. The U.S. President Joe Biden released a statement late on Sunday saying that he had ordered the federal government to make certain that the customers of both Signature Bank in New York State and Silicon Valley Bank in California would get all of their money. This is a big deal because normally when you have an account with a U.S. bank, the insurance only covers the first $250,000. However, the emergency program now being launched by the Treasury Department and other federal economic agencies will cover all of the customers' deposits in those two banks. That way, the people who use those banks to run businesses, for example, can pay their bills and make payroll. Now, there is a lot of controversy already over this emergency program. Even though the federal government says that this will not be a cost to taxpayers, some economists say ultimately this cost will be passed on to taxpayers and to banking customers. There are others who are saying that it is important for the U.S. government to prevent a run on other banks if customers have more money than $250,000 deposited in those institutions. They say it is critical to keep the U.S. economy on a steady footing. The U.S. president does note that there is growing concern about the situation with the banking sector, and he told reporters on Sunday evening that he's going to talk to the nation about it on Monday.
Well, SVB mostly provided financial services to fledgling companies in the tech sector. The bank claimed to support nearly half of all venture-backed startups in 2022. But after SVB's collapse, many of those startups are now in trouble, unable to access their funds, and are facing difficulty paying salaries and meeting operating costs. While it's mostly tech firms at risk, SVB is also involved in other sectors. It loaned around $4 billion to the wine industry, and now thousands of wineries are locked out of their accounts. Meanwhile, in the UK and the EU, there are fears that the ripple effects of the SVB's collapse may spread. The UK's Chancellor Jeremy Hunt is warning of a serious risk to domestic tech firms. Economist and financial analyst Robert Scott says the Federal Reserve's raising of interest rates led to the issues in the banking sector.
The Fed has an obligation, Treasury and the FDIC, actually in this case, the ones who made the announcement, they have an obligation to protect depositors and the banking system. But that begs a larger question. Is the Fed going to get the message and slow down this program of tightening of the interest rates in the economy? The concern is that the Fed is going to pitch the economy into a recession. That will cause millions of job losses, and that will hit the poorest and the hardest, the black and brown workers who will lose their jobs first. The wealthy and powerful who own the corporations that are benefiting from these kinds of bailouts will not be hurt. They'll keep their jobs, they'll keep earning profits. It's low-income workers who will suffer as a result of these tight Fed policies.